Okay, let's unpack this. We've got a single, seemingly, pretty standard job posting from Coinbase. But it is sending, well, seismic waves across the entire crypto world.
Yeah.
Because it looks like the biggest clue yet about the future of their Layer 2 network, Base.
It really is. I mean, it feels like the most significant non-announcement we've seen this year, possibly. It's like a corporate whisper, but it's screaming massive technological and philosophical shift.
Exactly. And the role itself, it sounds almost boring on the surface. Token and governance research specialist for Base. Now, you see that from another company. Maybe it's just another HR filing, right? Standard stuff. But for Base, Coinbase's Layer 2 that's just exploded in growth, this job description, it feels like a massive glowing clue. It is arguably the clearest public signal Coinbase has given that they are moving aggressively towards both decentralization and potentially launching a native network token.
Yeah, and what's really fascinating here is understanding the weight behind this. I mean, Coinbase is the centralized exchange giant, right? They're the ones who built this massive bridge between sort of Web 2 regulation and trust and Web 3 access. So for them to post a role that's explicitly focused on decentralized governance models for their own L2, that suggests a really fundamental pivot, a move away from pure centralization, potentially. They seem to be acknowledging maybe that to truly scale in this Web3 environment, you have to balance that Web2 trust they've worked so hard to earn with, well, genuine Web3 community governance. Ownership, really.
Okay, so if this job posting is the smoking gun, what exactly is our mission today? What are we trying to figure out here?
Right. So our mission is to basically synthesize the information we have, look at the sources, and figure out precisely what this higher signals for Base's, let's call it, decentralization roadmap. We need to analyze the likelihood, which seems pretty overwhelming now, of a native token. People are speculating, Base or CBA, something like that. And then we need to project why this potential pivot really matters, not just for people using Base, but for the entire Web3 ecosystem. Anyone investing in or building on crypto infrastructure needs to understand this. We're basically decoding a corporate strategy that's kind of hidden in plain sight within a job application.
Right. And I think to really grasp the magnitude of this potential shift, we probably need a quick Base 101 just for anyone listening who needs the foundational knowledge. What exactly is Base and why is its growth such a critical factor right now?
Yeah, sure. So Base is Coinbase's Ethereum Layer 2 network. It launched back in 2023. At its core, it's all about scaling Ethereum. Think of Ethereum mainnet as this super busy highway, often congested, often expensive. Base is like a dedicated express lane built right on top. It makes transactions way faster, way cheaper for the actual user.
But there's a key technical detail here that really sets Base apart, and it ties directly into this whole governance question, doesn't it? The underlying tech stack.
Absolutely. That's crucial. Base is built using Optimism's OP stack. Now, the OP stack is basically a standardized, modular, open source framework for building L2s. And this is really important because choosing the OP stack aligns Base with Optimism's bigger vision for what they call the superchain, which is this idea of an interoperable network of L2s that can share things like sequencing, security, and yes, potentially even governance structures down the line. So by committing to the OP stack, Coinbase kind of implicitly committed Base to a future that's more open, more community-centric. That technical decision almost makes this move towards decentralized governance feel, well, necessary, not just optional.
And that technical choice, combined with the Coinbase brand and ease of access, has clearly paid off. The growth has been just blistering, hasn't it?
Yeah.
And this rapid success, this scale, is precisely what seems to be forcing Coinbase's hand now when it comes to governance.
Precisely. Yeah. The metrics basically demand a more formal framework. You can't ignore them. Base is now, firmly cemented among the top 5 Layer 2 ecosystems globally. It's right up there with the big names: Arbitrum, Optimism itself, ZK Sync, Starknet. But it's the pace of adoption that's really staggering.
Can you give us some specifics on that growth? Put it into context.
Yeah, sure. We're talking about truly explosive scale in a very short time frame. In just its first year, Base processed over 200 million transactions on-chain. Now, to put that into perspective, that level of activity puts it way ahead of many established Web3 chains and definitely ahead of other competitive L2s when they were at a similar stage of maturity. And maybe even more importantly, its total value locked, the TVL, which is the total value of assets people have bridged onto the network and are using there, it's blown past $1.5 billion. And that number, it's been climbing pretty aggressively through late 2024 and into early 2025.
Right, and that $1.5 billion TVL mark, that's not just a vanity metric, is it? It signifies something deeper.
No, it absolutely signals maturity. When you hit, $1.5 billion in value secured on your network and you're processing hundreds of millions of transactions, you're not just a side project anymore. You are core financial infrastructure, period. And infrastructure at this scale, it just can't credibly operate long term under the complete centralized control of one single company. It just doesn't work in Web3. The sources we're looking at really emphasize that this sheer scale forces a governance change. Why? Because the whole ecosystem being built on top, all the DeFi apps, the NFT marketplaces, the wallets, social apps, they demand a path towards stability and community input. And frankly, centralized corporate control just can't guarantee that in the long run. There's always the risk of a strategy shift or, unilateral decisions.
So the tech foundation is solid, the market adoption is clearly there, the community is active, and frankly, probably waiting for this. This job posting feels like the signal that Coinbase is acknowledging, okay, the early launch phase is over. Time to mature.
Exactly. So now let's maybe put the scale discussion aside for a moment and really dive into the text of that job description itself, because this is where you see the specific actionable intent. The language matters here.
Yeah, this is where it gets really interesting, I think. As someone guiding the listener, I look at that description and I see some very specific technical language popping out. The role specifically involves researching, quote, decentralized governance models. It talks about digging into tokenomics, developing community coordination mechanisms. This isn't just about tweaking existing systems or optimizing things. It sounds like they're hiring someone to create entirely new, decentralized systems from the ground up.
They are essentially hiring a chief architect of autonomy for Base. That's how I read it. They are explicitly looking for systems designers for, and this is the key phrase, token and protocol governance at scale.
Yeah.
Now, that phrase alone tells us they've likely already moved past the question of if Base will have a token. They seem to be entirely focused now on how they're going to structure that token and its governance to effectively manage billions in value, maintain that huge network volume, and importantly, do it in a way that works for Coinbase. It's framed as a design problem now, not an existential question of whether to do it.
Okay, but let's address the elephant in the room, the centralization critique.
Yeah.
Because that's been the main counter-argument or worry about Base since it launched last year, right?
That is absolutely vital context, yeah. Currently, Base is undeniably centralized, certainly compared to its peers. It's largely controlled by Coinbase, particularly when it comes to things like technical upgrades, the sequencer, the ability to potentially halt or upgrade the chain unilaterally. And this made it a bit of an outlier compared to other major L2s like Optimism or Arbitrum, which, prioritized community governance much earlier, sometimes right from the start. This new hire, though, it looks like a very clear-cut attempt to kickstart a formal roadmap towards what people in the space call progressive decentralization.
Progressive decentralization. Right, that's kind of the classic Web3 playbook for launching credible networks, isn't it? Start centralized for speed and security, then gradually hand over control. But how does the pressure on Coinbase to do this now compared to, say, how Polygon handled it or Arbitrum? Is Coinbase moving faster, slower, or just differently because they're...
Well, Coinbase. I'd say they're moving at probably the optimal speed for a large, publicly traded, regulated entity like them. It's different. Networks like Arbitrum and Optimism, they were kind of born more organically from research labs or smaller teams, often without the same immediate corporate or regulatory constraints. That allowed them to decentralize maybe more rapidly, or at least signal it earlier. Coinbase faces intense institutional scrutiny, regulatory oversight, shareholder expectations. Therefore, their approach to progressive decentralization was always going to be more phased, more cautious, more intentional. They're following that classic strategy. Start centralized for efficiency, build the product, get adoption, ensure security, then gradually hand over control to the community as the network matures and hopefully as regulatory clarity improves.
And that path, that progressive decentralization roadmap, it almost inevitably requires a governance token, doesn't it? It's hard to imagine true community control without one.
Absolutely. I mean, it's pretty much non-negotiable if they want to achieve genuine community ownership and participation at scale. So, given the scale we talked about, the explosive growth, and now this explicit need for tokenomics and governance expertise detailed in the job posting, the introduction of a dedicated governance token for Base, whether it ends up being called Base or C-Base or something else entirely, it could easily become one of the biggest, most anticipated token launches of 2025. This token would be the core mechanism to actually enable the decentralized governance that this new specialist is being hired to design and help implement.
Okay, this brings us nicely into Section 3. The strategic implications. This is huge. If they actually follow through, issue a token, decentralized governance. What does this massive philosophical pivot really mean for Coinbase as a company, for its identity? And maybe more broadly, why is this potentially such a big deal for the entire Web3 space, well beyond just Base or L2s?
I think the single most significant detail here, the one that underlines the shift, is that Coinbase has never issued its own native network token before. Ever. Their entire identity, their brand has always been built around being the compliant interface, right? The regulated broker, the secure gateway, the easy on-ramp. Doing this now, launching a network token with decentralized governance, it fundamentally changes their identity. It shifts them from being purely a centralized exchange and custodian to also being a network operator and a core ecosystem builder. It's a massive evolution in their business model.
Okay, so if they do issue a Base token, what would its actual practical functions likely be? What jobs would it need to do in this complex ecosystem they're building?
Well, looking at the successful models out there and considering the job description, the sources suggest three really key functions. Pretty standard, but crucial. First, obviously, it powers governance. It gives token holders voting rights over important things like protocol upgrades, changes to network parameters, how treasury funds are spent, basic DAO stuff. Second, it would likely provide incentives for validators or sequencers, whoever ends up running the core infrastructure, to ensure the network stays secure, decentralized over time, and censorship resistant, aligning incentives. And third, and this is really important for growth, it would be used to reward the broader ecosystem. Think developers building cool apps, users actively participating, liquidity providers making markets function, similar to how OP or ARB tokens are used to bootstrap activity.
Right. And we saw the kind of immediate market impact when Arbitrum launched ARB, didn't we? It drove just an enormous wave of liquidity, developer interest, speculative activity. It essentially created this whole new economic gravity well on Ethereum. You can imagine a Base token backed by the Coinbase brand, the user base, the accessibility. It could generate an even more explosive rush of liquidity and interest, couldn't it?
Oh, absolutely. That's the almost guaranteed short-term market impact. There would be huge hype, huge volume. But, beyond the potential price pump and the immediate frenzy, we need to focus on the longer-term philosophical implications, too. Coinbase, as we said, has historically faced that criticism of being the centralized behemoth in a decentralized world. This move, if executed well, is their most explicit declaration yet, that they are serious about actually bridging the institutional world and the decentralized world in a meaningful way, not just providing access, but participating.
And this bridge, it seems like it could have a very specific structure, what some are calling the compliance model. This feels like the key insight, especially for regulators and traditional institutions who are still warily watching the crypto space.
Exactly. This is where Coinbase is frankly uniquely positioned compared to almost anyone else. A governance framework designed, implemented, and maybe initially overseen by a major publicly traded, regulated entity like Coinbase. That could become the gold standard, or at least a widely copied model, for compliant, scalable, institution-friendly DeFi and Web3 governance. They have the opportunity, maybe even the obligation, to prove that on-chain governance can successfully coexist with intense accountability, with robust risk management frameworks. That's something that, a purely anonymous or pseudonymous DAO might struggle to demonstrate to regulators.
Okay, but wait a minute. If they have to maintain that institutional compliance, that regulatory comfort level, how does that inevitably shape the actual governance structure they build? Won't that need for compliance necessitate some kind of centralized backstop or veto power or emergency controls? Doesn't that potentially undermine the whole idea of true community autonomy?
That is the absolute tightrope walk. That's the core challenge. And yes, the compliance burden will absolutely shape the governance design, no question. For instance, this new specialist they're hiring, they will almost certainly be researching how to potentially integrate things like KYCML requirements for certain high-stakes governance proposals, or maybe for delegates who wield significant voting power, or they'll be looking at how to implement effective time locks on proposals, or maybe even emergency fail-safes or circuit breakers that can satisfy regulatory bodies concerned about exploits or illicit activity. It's quite possible, even likely, that initially base governance might retain certain Security Council powers or emergency governance, multi-sigs, perhaps controlled by Coinbase or a designated foundation that can act quickly to stop malicious proposals or respond to critical bugs.
Which makes sense for stability and security, especially early on, but could feel corrosive to the purists who want absolute decentralization from day one.
Precisely. They're likely aiming for what you might call credible neutrality, not absolute neutrality. There's a difference. But the institutional assurance this provides is critical for their strategy, I think. Look, if Coinbase, the compliant giant, the one Wall Street kind of understands, can successfully implement a decentralized governance system that still maintains a clear chain of accountability and risk management, that removes a major psychological and practical barrier to entry for other traditional finance players who are interested in DeFi but terrified of the regulatory risks and the Wild West perception. It could legitimize the whole model of decentralized network operation for a much broader, more mainstream audience. Okay, so if Coinbase is serious about building this compliant yet decentralized governance structure, maybe at massive scale, the good news is they don't need to reinvent the wheel entirely. This new research specialist they're hiring will absolutely be looking at the successful blueprints, the playbooks that are already running effectively in the wild.
All right, let's get into those playbooks. The most obvious benchmark, the clearest comparison, has to be Optimism's OP governance model, right? Especially given that Base is built on the OP stack itself.
Absolutely. That's the first place you'd look. And Optimism did something really clever early on. They arguably solved, or at least significantly mitigated, a major flaw seen in many early DAO governance models, which was the problem of governance capture, where short-term financial interests or large token holders could dominate decision-making, potentially harming the long-term health of the protocol. Optimism addressed this with a really powerful dual house structure.
Okay, break down that dual structure for us. What are the two houses, and why is that split considered so effective?
Right, so you have the token house and the citizens house. The token house is pretty straightforward. That's where OP token holders vote on things like key technical upgrades, changes to network parameters, and importantly, how protocol incentives are distributed. It ensures economic alignment with the token holders. However, the citizens house is different. It's designed specifically and solely to fund public goods. Think core protocol development, essential infrastructure, educational initiatives, things that benefit the entire Optimism ecosystem and potentially the whole superchain, but don't necessarily have an immediate direct profit motive for token holders.
And why does separating those two functions matter so much?
It creates a crucial check and balance. The Citizens House, which often gets its funding from network revenue like sequencer fees, acts as a safeguard. It protects the long-term health and development of the ecosystem from potentially being raided or compromised by short-term speculative interests that might dominate the token house. It ensures resources go towards foundational needs. For Base, adapting a similar dual mechanism seems incredibly logical, especially because the public goods funding, potentially from Base's own sequencer fees, could be deployed through a Citizens House model to benefit not just Base, but the entire superchain ecosystem that Base is part of. That creates strong technical and philosophical alignment with Optimism.
So it seems highly likely that this new specialist hired by Coinbase will be spending a lot of time looking at how to structure maybe a Base foundation or a similar independent funding vehicle, something that can mimic that long-term focus of the Citizens House and insulate essential funding for market whims.
Exactly. That seems like a very probable path. They need to ensure that the immediate pressures related to, say, a potential based token price don't override Coinbase's stated long-term goal of building stable, scalable infrastructure for the long haul.
Now, another powerful example, maybe less about structure, more about sheer scale, is the Arbitrum DAO treasury. That really demonstrates the kind of financial operation Coinbase needs to be prepared to manage decentrally.
Yeah, Arbitrum is a fantastic case study in decentralized capital coordination at massive scale. Their DAO currently manages literally billions of dollars worth of ETH and ARB tokens, and it does this through proposals submitted, debated, and voted on entirely by the community of ARB token holders. It really shows that a governance token isn't just some abstract voting right. It's a mechanism for managing a vast treasury. It can fund huge grant programs, coordinate major marketing initiatives, deploy capital strategically across the DeFi ecosystem on Arbitrum. So the Base specialist needs to understand not just the governance theory, but the practical logistics, the security considerations, the operational complexities of managing potentially a multi-billion-dollar DAO treasury without, major screw-ups or regulatory issues. It's a huge operational challenge.
And it's worth remembering, too, this isn't actually Coinbase's first rodeo when it comes to interacting with decentralized governance, even though they haven't issued their own token before.
That's a really good point. We have historical evidence showing Coinbase has been engaged with this stuff for years. They've actively participated in protocol votes on major established DeFi platforms like Uniswap and Compound in the past. They hold significant amounts of tokens and have often voted, sometimes quite publicly, on key upgrades or parameter changes. So they understand how these systems work from the inside, from a participant's perspective. That gives them a huge advantage, I think, in designing a system that works effectively for their specific needs and constraints.
And the timing of this move, as we touched on earlier, it really seems to align perfectly with the historical precedents set by other L2 giants, doesn't it?
Yeah, the timing feels right based on the life cycle of similar projects. If we look back at, say, Polygon with Matic or zkSync, both of those teams introduced their token-based governance models after they had already achieved a significant verifiable level of scaling and user adoption. They didn't do it while they were still primarily in the testnet phase or just launching. They proved the tech worked. They proved there was market demand first. Base is arguably right at that inflection point now. They've proven the technology with the OP stack. They've proven the market adoption with those huge transaction numbers and TVL. So the next logical step, according to the established playbook, is to prove their commitment to community ownership and decentralization to achieve maximum network effect and ensure long-term viability and legitimacy. This job posting essentially confirms they understand that and are ready to make that commitment.
Okay, so we've gone through the high-level strategy, the technical comparisons, the governance models, but let's bring it down to earth. What does all this actually mean for you, the person listening?
Whether you're an investor, a developer, maybe just a curious on-chain user of Basepack, what's the so what?
Yeah, the bottom line here, I think, what really stands out is potentially massive opportunity. And it's primarily driven, let's be honest, by the speculation around a possible retroactive airdrop. A potential base token launch creates almost immediate potential opportunities for anyone who is active on the network right now, or who becomes active soon. If you're deploying smart contracts, if you're providing liquidity to DXs on Base, if you're minting NFTs, even if you're just performing frequent, non-trivial transactions, you really need to be paying attention.
That's right. Historically, these big progressive decentralization moves, especially when tied to a major new token launch, are often coupled with some of the most significant wealth redistribution events we see in crypto. We're talking about potentially huge retroactive airdrops designed specifically to reward the early users, the community members, the builders who helped bootstrap the ecosystem before the token actually existed. You just have to think back to the impact of the Arbitrum airdrop, the Optimism airdrops, Uniswap's Unini token distribution. These can be life-changing for early active participants.
And that leads directly to the most actionable insight for listeners right now. You need to be watching very, very closely for any signs of a base points program or maybe base quests type campaign appearing. These kinds of mechanisms, often framed initially as loyalty programs or ways to track user engagement, are frequently the early, sometimes thinly veiled, signals that an airdrop eligibility snapshot is being planned or is already underway.
And we can probably get even more specific than just use the network. Looking at successful, more recent airdrop designs, like maybe from Blur or Eigenlayer, they often reward more than just raw transaction volume. They tend to look for sustained engagement and, crucially, interaction diversity. So if Base does launch some kind of points or quests campaign, they'll likely be looking for specific on-chain behaviors that help them filter out the Sybil attackers, the bots just trying to farm the airdrop, and identify genuine long-term users.
Okay, so can you give listeners some concrete examples? What kind of specific activities should people maybe be looking at or considering performing on Base right now if they want to potentially position themselves well for a future airdrop?
Sure. Based on past precedent, here are a few things that often get weighted heavily. First, bridging native assets like ETH or maybe stablecoins from Ethereum mainnet to Base and actually holding them there for a significant period, not just bridging in and out quickly. Second, sustained liquidity provision on major Base DEXs. Think platforms like Uniswap v3 on Base or native DEXs like Arbitrum, providing liquidity over minutes or months, not just for a day. Third, and this might be increasingly important, unique contract interactions. This means using a variety of different protocols on Base, maybe staking NFTs, participating in on-chain social applications like Farcaster, which has deep roots on BaseUp, playing games built on Base, interacting with lending protocols. These more complex interactions demonstrate you're actually exploring and using the ecosystem, not just running a swap bot. Volume of transactions might matter, but the number of unique protocols interacted with could matter even more.
And we can connect all this speculation, this potential airdrop farming activity, back to the importance of just watching the overall DeFi activity heat map, right?
Yeah.
Looking at the broader metrics for Base.
Absolutely. If you're serious about this, you should be tracking Base's specific share of overall L2 decentralized exchange, DEX, volume. Is it growing? You should watch its growth in unique active wallet addresses. Are more real users coming on board? And especially track the frequency and volume of transactions involving high-value, established protocols versus just, meme coin trading.
Yeah.
Strong growth in these fundamental metrics indicates a healthy, fertile ground for a token launch, and it strengthens the argument for Coinbase rewarding that sustained, genuine activity.
Now, flipping to the other side, for builders and developers thinking about where to deploy their next project, the implications of this potential shift seem even clearer, perhaps even more significant than for users.
Oh, definitely. For builders, the signal is expect a dramatic increase in support and resources flowing into the Base ecosystem. As Coinbase transitions Base towards this more open, community-governed model, we are almost certain to see significantly more grant funding become available, probably larger prize pools at hackathons focused on Base, and eventually substantial governance funding potentially flowing out of that future DAO treasury. This is the seed capital that really drives innovation, attracts talent, and helps the ecosystem expand rapidly.
And beyond just funding, this entire move, this commitment to decentralization, it fundamentally enhances Base's reputation, doesn't it?
Mhm.
It helps shift the perception from Base as just Coinbase's proprietary L2 towards something more like Base as a truly community-involved L2, but with the immense backing, resources, and regulatory savvy of Coinbase.
That legitimacy boost is huge. And that unique combination scale, plus brand trust, plus decentralization commitment, could potentially make Base the preferred L2 platform for certain types of projects. Think about compliant DeFi protocols, Web3 startups aiming for institutional partnerships, projects that need both the philosophical alignment of decentralization and the practical comfort of Coinbase's regulatory standing and user base. They could get the best of both worlds on Base. The perceived safety and legitimacy that comes with the Coinbase Association, coupled with a genuine commitment to becoming a DAO-governed network. That's a powerful combination.
Okay, let's pull back one last time now and really look at the big picture. Coinbase's long game. This job posting, this apparent commitment to progressive decentralization for Base. How does it fit into their multi-year, maybe multi-decade vision for the future of finance and their role in it?
I think this strategy, this move, represents maybe the clearest blueprint we've seen yet for the next evolution of major crypto companies. Certainly for centralized exchanges trying to stay relevant in an increasingly on-chain world. It's the ultimate expression, perhaps, of blending their core strength, which is running a regulated, secure, centralized exchange operation with the future, which is decentralized networks like Base. They seem to be building a hybrid future, trying to leverage their existing strengths to mitigate the risks and capture the opportunities of both extremes, pure centralization and pure decentralization.
It really feels like it fundamentally redefines Coinbase's role in the ecosystem entirely.
Yeah.
They're moving way beyond just being the place you go to buy Bitcoin.
They absolutely are. If they launch a Base token and successfully decentralize its governance, it cements Coinbase's position as not just the leading crypto exchange, especially in regulated markets. It establishes them as a major network operator, a foundational ecosystem builder, and potentially a key innovator in compliant DAO governance. Their corporate success, their future growth, becomes no longer solely tied to trading volumes and custody fees on the centralized exchange. It becomes inextricably linked to the health, the security, the adoption, and yes, the decentralization of the Base network itself. That's a massive strategic expansion.
And this commitment to decentralization, it feels almost mandatory if they genuinely want to achieve their biggest, most ambitious stated goal, doesn't it?
Yes, exactly. The whole move aligns perfectly, almost necessarily, with Coinbase's frequently stated objective of building an on-chain economy for the next billion users. That's their moonshot. Now, to onboard a billion users onto crypto rails, you need, well, at least three critical things. You need massive scalability, which Base, as an L2, provides. You need super low transaction fees, which Base also provides compared to Ethereum mainnet. And crucially, you need a governance model that fosters trust, encourages shared ownership, and makes people feel invested in the platform's future, not one that relies solely on the opaque decisions of a single corporation. Pure centralization, especially for core infrastructure, is increasingly seen as a single point of failure or control in Web3. Decentralization, done right, offers a path towards resilience, permissionlessness, and greater user buy-in at global scale.
So long term, we could be looking at a future with a multifaceted Coinbase economy. Base acts as the foundational layer, maybe powering not just DeFi, but also on-chain identity solutions, maybe critical payment rails, perhaps even integrating deeply with their exchange and wallet products. They aren't just launching a token, potentially. They're launching the core infrastructure layer for their next decade of growth and expansion into the on-chain world.
So yeah, that pretty much wraps up our deep dive into this. I mean, the job posting for the token and governance specialist, it really isn't a subtle hint anymore. It feels like a full-blown declaration of intent from Coinbase. They seem to be making a potentially irreversible shift from being just the exchange giant to becoming a true layer 2 powerhouse. And the chosen path is clearly signposted: progressive decentralization. I think the key takeaway from synthesizing all these sources, all these signals, is pretty clear. A base token seems highly probable, maybe even inevitable now. And the specific structure of its governance, how they design it, how they balance compliance and community, that is going to be one of the most closely watched, most highly anticipated design documents in the entire Web3 space, probably this year or next.
Absolutely.
Yeah.
And it really does raise that crucial, maybe billion-dollar question that Base and Coinbase will have to answer convincingly in the coming year or two, especially given the intense regulatory climate we're still in. Can Coinbase actually maintain its hard-won institutional compliance, its regulatory standing, while fully embracing genuinely decentralized community governance for Base? Can they successfully walk that incredibly fine tightrope of having truly decentralized ownership and control, while simultaneously ensuring the kind of accountability and risk management that regulators demand?
That is the ultimate tension, isn't it? It's the inherent conflict, maybe, between the demands of the traditional regulatory ledger and the principles of the decentralized permissionless ledger. And arguably, this new specialist's primary, most challenging job will be to figure out how to bridge that gap and solve that fundamental tension for Base.
Fascinating, fascinating stuff. Okay, we have covered the sources, we've dissected that crucial job posting, we've looked at the potential playbooks, and laid out some thoughts for potential airdrop watchers. Now, as we wrap up, let's leave you, the listener, with maybe one provocative final thought to mull over, something that builds on what we've discussed today. If, or perhaps when, Base does launch its own native token, will the immense regulatory legitimacy, the established brand power, and the massive user base of Coinbase ensure that this hypothetical Base token immediately outperforms established community-grown L2 governance tokens like OP and ARB, purely in terms of market capitalization and perceived value? Could it be that in this next phase of crypto adoption, perceived compliance and institutional backing become the ultimate value drivers for network tokens, potentially even outweighing purely decentralized origins? Something to think about. Now, if you found this deep dive valuable, if you learned something today, we'd really appreciate it if you engage with us.
Seriously, subscribing to the channel, dropping a comment below with your thoughts, hitting that like button, it genuinely helps support the deep research we put into these sessions. It boosts our visibility in the algorithms, and most importantly, it lets us keep creating this kind of quality crypto content tailored specifically for you, the learner, week after week. Thank you again for diving deep with us today.